What if I told you that millions of homeowners right now are sitting on interest rates high enough that a small drop could save them hundreds of dollars each month? But most people don't realize it. If you bought a home in the last 3 to 4 years, or you've been wondering whether refinancing makes sense, this video is for you. Hey future and current homeowners, I'm John Werner with Mortgage and Credit Pro, licensed in Oregon, Washington, and Arizona. Today we're breaking down what's happening with mortgage rates, why more homeowners now have higher rates, and what that means for refinancing and buying in 2026. Let's start with what changed. Back in 2022, rates hit historic lows. We saw record-breaking refinancing. At that time, only about 10% of the homeowners had rates above 5%. Fast forward just a few years, now more than 30% of homeowners have rates above 5%, and roughly 20% have a rate above 6%. That is a big shift. And here's what's interesting. The most common rate people used to buy over the past few years wasn't 7%. It was 6.875 to 6.99. Many buyers bought their rate down under 7%, so they feel better psychologically. Now let's talk about what that means. If rates move down even slightly, for example, to 6%, many homeowners would suddenly have a refinance opportunity. Industry data suggests that around 5.5 million homeowners could benefit if rates hit that level. And if rates dropped into the high fives, that number jumps even higher. Now let me share a quick success story. I had a client who purchased a home in 23 at 6.875. Great home, great move for the family. But when rates dipped slightly earlier this year, we reviewed their numbers. A drop of just 0.75% reduced their monthly payment by over $300 a month. No cash out, no big reset, just lower costs. Same house, same income, just better timing. That's why watching the market matters. But timing emotionally does not. Now let's talk about the rate lock-in effect. There are still millions of homeowners sitting on rates under 5%. In fact, about 12 million homeowners are under 3%. Last year, only about 6% of those homeowners gave up those low rates. That's why inventory stayed tight. But here's the key. Most current buyers don't have 3% rates. They're in the mid to high 6 range. So refinance conversation is slowly coming back. The Mortgage Banker Association reported that refinance applications are up more than 100% compared to last year. That tells you something. Now let's talk about affordability. There's been discussions about mortgage-backed security purchases and the government policy to help bring rates down. Whether that's meaningful and moves rates in the long term, it's still debated. But even an 8.25% movement can create opportunity. For buyers, a 0.15% drop might save you around $35 a month on an average home. Not life-changing, but helpful. For homeowners sitting at 6.875, that drop could mean real savings. The bigger message here is trying to perfectly time the market is emotional. Making a data-driven decision is strategic. If your rate is in the high 6s or 7s, it's smart to review your options when rates move. Don't panic, don't guess, just review it. If you're in Oregon, Washington, or Arizona, and you want to know whether refinancing makes sense for you, I'm happy to run the numbers. And if rates are not quite there, if it doesn't make financial sense to refinance at this time, we will take down your information and add it to a free rate monitoring system. So when it becomes time to move forward with the refinance, we will reach back out to run an updated numbers. No pressure, just clarity. And if you're buying, remember, you can always refinance at a lower rate. You can't refinance the price you didn't buy at. If this video helped you understand the bigger picture, give it a thumbs up, subscribe for more clear market updates, and share it with someone who bought in the last few years. I'm John Werner with Mortgage and Credit Pro, and I'll see you in the next video.